All right, hello everyone and welcome to our stream today. Today we're going to be talking about PPP loan forgiveness. We're going to be talking about everything you need to know about PPP loan forgiveness and everything that you need to know about the new regulations, what's changing, how things are changing, and how this will affect you. So today we're talking all about PPP loan forgiveness, and we're talking about what's now changing, what's different between the new bills that are actually being released. We've already seen so far that a new bill was just passed on the 22nd, and we're actually going to see a bill possibly signed off by the Senate soon as well. So today we're going to be diving into this. We're going to be talking about everything you need to know about the changes, because the original PPP law is being changed of what is forgiven and what's not, and it affects all of us. For anybody that has questions along the way, feel free to get in touch with us, 877-600-2487. Our website is creditsuite.com, and this is what we do. We help business owners get capital. So if we can help you get money outside of PPP loans, including PPP loans, if we can help you build business credit, set up your business where you're fundable, give us a ring or get approved online at creditsuite.com/get funding. So I'm not going to spend a lot of time talking about the PPP loan. We already all know how the PPP loan works, right? We already all know that you can get approved before, if you had employees before February 15th, 2020, that you needed to have less than 500 employees, that sole props, independent contractors, self-employed, all of these people can qualify for PPP loans, even nonprofits. I'm not going to spend a lot of time on this. I'm assuming at this point that a lot of you are already somewhere in the process of getting a PPP loan, or you've already secured the PPP loan. So I want to talk today about what's changing regarding this. On the 22nd of May, the Treasury Department issued interim financial rules on the PPP loans. And what this did is it basically started outlining what happens when it comes time for forgiveness, what forgiveness is going to be, what forgiveness is going to look like. And so that's exactly what I want to dive into today, is to talk about the changes between the PPP law and actually what's happening when it comes to forgiveness. Now, unfortunately, some of these changes that are coming from the Treasury are really going to create a burden on small business owners, and it might even leave banks holding these short-term 1% interest loans, which is not what any of us want to actually have happen here. Okay, so the whole goal here with the PPP loan is to basically have very few people that have to pay it back, most of the loan be forgiven, and then banks used as an outlet to be able to disperse this money very quickly. But unfortunately, some of these Treasury guidelines are not going to be the case. Some of these loans are not going to be forgiven. A large part of these, the loan you got might not be forgiven, and then that creates a hardship on the business owner and on also the banks. But again, we're now looking at the House and Senate coming in and passing another bill that trumps the Treasury bill to fix some of these issues. So today I'm talking about both. I'm going to talk about one, what this bill on the 22nd from the Treasury really means when it comes to forgiveness. And second, the new bill that's in the works that would trump this bill and what it looks like that could change on the Treasury bill. So let's dive in first talking about exactly what took place on this Treasury bill. The first of which is that your loan can be reviewed at any time. They call it a safe harbor. Originally, it was basically said that, look, these loans under $2 million, which was almost all PPP loans, actually can be forgiven, or actually are considered to be safe harbor. They were basically made in good faith under economic uncertainty faced by the borrower necessitating the loan. So what it meant that, hey, if the bank approved the loan, you're good. You don't have to worry about it. But with these new Treasury requirements, what happens is that your loan can be reviewed at any time by SBA, and then in doing so, they can actually come back and make part or all of that not valid. Let me explain. So from SBA, or from the new regulation, for a PPP loan of any size, SBA may undertake a review at any time in SBA's discretion. For example, SBA may review a loan if the loan documentation submitted to SBA by the lender or any other information indicates that the borrowers may be ineligible for a PPP loan, or may be ineligible to receive the loan amount or loan forgiveness. So what they're saying here is that at any time, SBA can come in and determine that maybe the whole loan should never have been issued to begin with, or that part of the loan should not be forgiven. So this is a big adverse addition to what they're saying or what originally was with the original PPP loan. So that being said, a lot of people can lose out here because ultimately what they're saying is that some or all of the loan could need to be paid back. SBA might even actually not say the loan should have been issued to begin with and call all the money back. Now the bank would still get paid, but that would mean that you might have to give all of the money back. That might not, some of it might not have been forgiven at all. So an example here is that SBA had said through this process that if you had the ability to get credit elsewhere or could have gotten money other than PPP, that you may not qualify for PPP. So if SBA comes back 2 years later and says, hey, look, or the Treasury says, hey, look, we're going to go ahead and we're going to look at your loan application. We don't think you ever should have gotten it. Then all of a sudden a loan that was completely forgiven now has to be completely paid back. So this is a big problem because, again, we once had safe haven. Like, they were going to let us go. They were going to say, look, the banks issued this under good faith. They did their due diligence. We're not going to come in and overstep them. We're not going to trump them. We're not going to question what they said should happen. Now they're saying, look, we can. We can question whether you should have ever gotten the loan or the loan, any or all of it should even have been forgiven. So now we kind of have this hanging over our heads for a while, is the potential that they can come back and do this review. And we're going to talk about what that time period looks like as well. Speaking of time periods, once you file the forgiveness application with your bank, they have 60 days to review it. We already knew this. This was in the original PPP guidelines. I talked about this many times. And this is the way it worked. You basically have a year for actually to have the loan, or before you need to make your first payment on the PPP loan. The problem is that we know that the bank has 60 days to review that. But now what they're doing is they're coming in and they're saying, hey, wait, now we're giving SBA 90 days to approve the bank's decision. This is new. We didn't have this 90 days before. So now they're saying you've got 2 months. So let's do the math here. SBA says that you have 2 months to spend the money, 8 weeks to spend the money on payroll, etc. That's 2 months. Now we add in this extra 2 months here that they have to review the actual loan application. You submit the documentation to the bank. They have 2 months to review it. So we're at 4 total months. Now they're saying SBA has another 90 days to review the bank's decision. So now on top of that, we've got another 3 months. So we've got 7 months before you can even find out if your loan can be forgiven from when you actually got the loan. And we've got 5 months here from when you submitted the application in for forgiveness before you may even find out that the loan actually was forgiven or was not forgiven. Now, after all of this, SBA can still request more information. So even after they took 3 months to review it, they are still now allowed to come back and request more information, and then they will approve all of the loan for forgiveness or part of the loan for forgiveness based on their review. So if the SBA determines a portion or all of the loan did not meet their guidelines for eligibility of forgiveness, it can request repayment of the loan or pursue other available remedies. I don't know about you, but whenever the Treasury or the government says anything about other available remedies, it scares the heck out of me. But that's exactly what the new Treasury guidelines actually state, is that the SBA can actually take other remedies. Now, they didn't define what other remedies even mean. This is open. We don't even know what other remedies they could consider to be feasible to come back and get the money from us if they feel that we need to pay that money back to them. But again, something we definitely want to take a look at here or know about, because they have the right to be able to do that. Now, the other problem is that they're now coming in and saying we have to keep all records on file for 6 years in case we get audited. And so now you've got to keep all the documentation on file for a total of 6 years after the date the loan is forgiven. And per the new regulation, okay, as noted on the loan forgiveness application form, the borrower must retain PPP documentation in its files for 6 years after the date the loan is forgiven or repaid in full, and permit authorized representative of SBA, including representatives of the Office of the Inspector General, to access those files upon request. So SBA or the IG can come in and review those, and you need to keep them on file 6 months from when they tell you it's forgiven. So after you go through that 2 months of the bank review, 90 days of SBA reviewing it, then they determine what should or shouldn't be forgiven. 6 years beyond that date, you need to keep that on file, which means from that time period, that's how long you could actually be audited by even the IG in that actual case, okay? Now, the borrower, you are responsible for calculating the forgiveness amount and providing the documentation that's needed to the bank for forgiveness. It's then the lender's responsibility to make a good faith review of that applications, and the guidelines say a good faith review would include basically getting the stuff they need to prove what you said. If you say that I spent the money on payroll, they're going to want proof of that. Either a third-party provider provides a report like an accountant that's outside of your business, or you're coming in providing payroll reports, canceled checks, lease agreements, utility bills, all the stuff you spent the money on, all has to be provided by you. The lender then will review all of that documentation to determine what's forgiven and what's not. Now, it's very important because there are some massive changes of how much of a percentage you could spend on payroll from the original bill in the new House bill that's proposed, and we're going to talk about that as we jump in here in just a few minutes. Now, here's the new date, or the existing date, June 30th. It was said that from the time you got the loan, you have until June 30th. Guys, it's the end of this month to be able to rehire the employees to get your payroll back to the amount that it was when you actually got the loan. And look, that date's coming up very fast. Now, they did add some other information on here. And if an employee was fired for cause or voluntarily resigned or voluntarily requested reduced hours due to the coronavirus, well, then that can still you can still request forgiveness. So now what they're saying is, look, if somebody left, if somebody quit, if somebody resigned, if somebody asked for less hours, well, then that amount can still be forgiven, but you're going to have to document that actually took place. You're going to have to provide the correspondence. You're going to have to provide the documentation proving to the lender that was the case, and that's the reason that your payroll was actually reduced, okay? Now, your forgiveness amount will be reduced by the same percentage of the reduction of your full-time employees. This is huge, guys. We need to know this because we have speculated on this for a while, and this is what's been speculated. They told us for a while that if we reduce two things, the number of full-time employees to part-time, or the number of total overall employees we have, head count, that the loan will be not forgiven, that part of it will not be forgiven. But we have not known how much of it will not be forgiven. We now know how much of it will not be forgiven. And what they're saying is the same percentage of the reduction of those staffing will be the percentage that's not forgiven. Here's an easy way to sum it up. If you have 10 employees, and you reduced it by letting one person go, and now you let 10% of your employees go, right? You had 10, now you have 9, you let 10% go. That would mean that the amount of loan that's not forgiven would be 10%. So whatever percentage you reduce your payroll headcount before June 30th is the percentage of loan that will not be forgiven. If you laid off half your staff, and you don't hire them back by June 30th, then half of the loan that you were issued will not be forgiven. So we now directly see the correlation between how much will not be forgiven and how much we're actually reducing our headcount. Now, another important thing, they have come in and said that they classify full-time employees as 40 hours per week. I know, for you and I, that's common sense. But traditional SBA loans consider 32 hours per week as full-time. So we see here now that 40 hours per week is what they're considering to be full-time. So you need to have your full-time employees put back to working 40 hours full-time in order for this to actually be successful, in order for this to actually wait, okay? So that to be said, this is exactly how this new regulation for the Treasury guidelines is going to work when it comes to forgiveness. Now, any amount of wages reduced in excess of 25% per employee will not be forgiven. So let's talk about this. It means if you took a full-time employee, 40 hours, and you reduced them to 20 hours, half of that, then that amount would not be forgiven. You can't reduce the wages by 25% or it won't be forgiven. That means if you were working full-time and I cut your hours by 20% or I cut your pay by 20%, that's okay. I can still have that amount forgiven. But if I cut your hours or cut your pay by 25%, then that won't be forgiven. So again, they've said in the original PPP loan, you must maintain the current level of payroll. The current headcount and the current number of full-time employees needs to still be the same amount of full-time employees by June 30th. Now what they're saying is you can reduce it by 25% and still be forgiven, but at 25% or higher, then it cannot be forgiven. So up to 25%, you're okay. But if you reduce somebody's hours by more than 25% or move them from full-time to part-time, for example, where they went from 40 hours to 20 hours, you cut them 50%, well, then that amount of money for that person would not be forgiven. Now, if an employee earns less than $100,000, you can offset wage reductions with hazard pay and bonuses that are eligible for forgiveness. So there is a way around this. I'm giving you a loophole. But again, you need to keep in mind that if you reduce somebody by 25%, you have a chance of that not being forgiven. Now, the wage reduction applies only to the portion of decline in employee salary and wages that is not attributable to the FTE reduction. And this rule is intended to avoid double harming borrowers for both wage and headcount reduction. That's as simple as it is. We've heard that there's a reduction for either of those. Either the wages declined or the headcount declined. What they're saying here is they found a way to account for only one of those you're punished for, not both. That's what it really comes down to. Okay, so that being said, more about this new regulation. This one's important as well. Owner employees, you and I, the owners of the business, and the self-employed payroll forgiveness is capped at $15,385. This is a really big deal for you guys. Because before, what we learned was that if you make over $100,000, they're going to exclude that portion over $100,000. Now what they're saying is we're only going to forgive the owner for $15,385 worth of payroll. That's all that's going to be forgiven. So this is going to be a little bit complicated here because the whole thing is complicated, but let me try to break this down. Remember, the maximum loan amount originally was that they don't even count anybody's income over $100,000, only to $100,000. Okay, that was the limit of employees. But here's the problem. If you did a 2.5% calculation on $100,000 on yourself because you're the owner, well, then that number well exceeds $15,385. So what I'm simply saying here is the original loan amount would be higher taking your employment into account than what they're now allowing you to only get credit for the forgiveness. So if you used yourself as an employee, which we all did, and you make more than the $15,385,000 over those 2 months time period, then the amount over that is not going to be forgiven, even though you did get a loan amount for that amount of money. I'm hoping that that makes a lot of sense. So what I'm basically saying here is this. When you originally got the loan, if you make $100,000 a year, well, then they gave you the loan based on your salary of $100,000. Okay. Or if you made $150,000, they still gave you the loan based on your salary of $100,000. But if you do the math here, 15,000 divided over those 8 weeks, that's like what? Let's just do some rough math here. That's like $7,000. Well, then that's less than that. So what they're saying is the way that it worked, where you originally got a higher loan amount based on $100,000, now you can only forgive $15,385. Almost certain you're going to have part of the loan not forgiven with this guideline, because that's going to mean that what you got originally loan amount was higher than what you can have forgiven for your own salary. So that's a problem. Right there, it's showing that part of the loan is not going to be forgiven. Now, here's the good news. I talked to you about some of the major changes from PPP to these new Treasury guidelines that have already been released on the 22nd. Those are solidified. They're factual. That is out there. What I just showed you is everything that is concrete per the Treasury guidelines as of this point in time, which is June 3rd. Now, the good news is there's a new regulation. After seeing that one on the 22nd, the House passed another one called the Paycheck Protection Program Flexibility Act, and they passed this to try to overcome the Treasury's bill's issues, and give us some leeway. So this is not law yet. We're waiting on Senate. But again, this is going to give you an idea of what it could look like and some more relief that we're looking at here in the very near future. Okay, so that being said, here's some of the major changes that it looks like we could be seeing. 75% of money from PPP had to be paid for payroll. The new regulation that has not been signed off on yet would reduce that to 60%. So we no longer need to spend 75% of the money we got on payroll. We can now spend 60% of the money on payroll and still be okay. Now remember, I need to make a line here in this presentation. What I've shown you so far has been factual per the Treasury's bill that's already passed. Now we're talking about the House's bill here that has not been passed yet. This is what is proposed, but not yet signed off on with the Senate. So we're looking at 60% reduction from 75%. That means you could use the money up to 40% of it on other expenses outside of payroll, not the 25% that was in the original PPP bill. Okay, so pretty big deal, pretty big important change. Now these expenses still include rent, mortgage payments, utilities, and interest on loans. That's what you can write off outside of payroll on that level. They were originally trying to get it passed at 50-50, which means 50% of the money had to be used on payroll, but the best that they got done to sign off on was 60% of the money has to be used on payroll. Still a big difference. I mean, it really helps a lot of us, and I'm going to show you why in a minute. This is so important. This is such a big deal, and I'm going to show you why in a minute. But this is a big deal because we can use the money for other things outside of actual payroll. Now, this is another big change. The bill would extend the window businesses have to use the funds from 8 weeks to 24 weeks. That's a big deal. Instead of giving us 2 months to use the money, they're now going to give us up to 6 months to use the money. A really big deal. Now, let me explain why this matters so much. Because think about what happened. When people started getting PPP funds, Florida, for example, our restaurants are able to be open now, I think, at 50% capacity. So how does that work? If I got a PPP loan, how am I supposed to get my payroll paid when half of my staff is still furloughed because I can't even open up my restaurant at full capacity? You see the problem? The problem is COVID-19 is still happening. Things are still shut down. A lot of businesses are shut down, but yet they have PPP loans and they have 8 weeks to spend their money, but they can't hire their employees back because their business is shut down. A restaurant can only hire back half their employees because they can only open to half their capacity. Okay, my buddy just got back from New Mexico. They're still shut down there. So people that are getting PPP loans can't use the money for payroll because their people are still furloughed because they're not able to open. So that's why this needed to be extended. It's such a big problem. So the new change per this bill also would push back the rehiring date from June 30th, the end of this month, to December 30th. Well, that makes a lot of sense too, because what I just said, a lot of businesses are currently shut down. They're not able to actually come in here and they're not able to actually hire back their employees to full capacity when their business is shut down by 100%, by 50%, by 75%. So they had to give us more time because a lot of businesses aren't even able to open. They can't bring their full-time employees back by that date. So this change makes a lot of sense. The bill provides more leeway on loan forgiveness for us as well. It applies if the business owner can show they could not rehire workers or reopen due to safety standards. We get that. So now this new bill would say, hey, look, if you can't rehire workers, well, now you can show that you were still shut down, that you didn't have the ability to, and that still won't adversely affect your ability to get forgiveness. It also extends the time recipients have to repay the loan as well. So they have longer than the 2 years to be able to pay back the loan, which is not what banks don't want, a short-term 2-year loan that has to be paid back. And the bill lets companies that get loan forgiveness defer payroll taxes as well in this new one that's proposed by the House. Okay, this bill is intended to take the small business owner out of an unattainable position, as I mentioned, because again, originally, what I already told you. The bottom line is, if you think about it, if I own a restaurant and my restaurant is shut down currently, I can't hire back workers and use 75% of the money on that. What I need to use the money for is rent, is electric, is utilities, because even though my restaurant's shut down, I still have to pay that stuff. So if you think about these changes, it makes sense. They're giving us longer time to hire back those employees because a lot of businesses aren't open to capacity yet. They're giving us more money that can be used for expenses because we need that. Right now, if we're shut down, we need to use the money for expenses like rent and utilities that we still have to pay even though our business is not in operation. We can't use the money on payroll because we're not allowed to hire our people back because we're not allowed to open. So if you think about it, when they passed the bill, they passed it quickly to get money in our hands. They didn't know how long this would go. Now that we're seeing how long this will go, a lot of these deadlines in the original bill and calculations just mathematically will not work for us because a lot of businesses are still shut down in their entirety or at 25, 50, 75% capability. So will this pass? Well, so far it looks okay. The minority leader, Charles Schumer, endorses the bill. But here's the problem. Rubio doesn't. You might not know Marco Rubio because you might not be in Florida, but you need to. Here's why. He's the one that drafted the PPP bill to begin with. He's the chairman of the Senate Small Business and Entrepreneurship Committee. He's the one. His committee drafted the PPP bill. So all the things that were added, all the things that were subtracted to PPP, they were all done by Rubio. So Rubio's opinion matters a lot here because he's the one that drafted the original PPP bill. Now, he supports a different bill, but they're pretty close. The bills are pretty close, so it looks like a compromise is going to happen. So, for example, Rubio says he doesn't want there to be 24 weeks to rehire employees. He only wants there to be 16 weeks, okay? So that's an example of what he's saying. So Rubio also opposes the easing on forgiveness without rehiring workers. He wants a little bit more stringent bill that you're not going to get that forgiveness unless you're rehiring those workers. So there's some differences from what I told you from the other bill he's entertaining, but there's enough similarities that what I've shown you today could definitely be a potential reality for all of us, okay? Now, also keep in mind, beyond this, that there's other options that are out there. The most popular option we're dealing with right now, well, let's talk about business lending in general. You need to know what's happening with this industry. The industry's been decimated. So if you want to get money, it's very problematic right now, and let me break it down. I call this the 3 C's of lending. You hear me talk about it all the time. Cash flow, credit, and or collateral. You need one of those 3 to get money. Well, cash flow financing is indefinitely stopped. All these lenders that were lending money based on you having consistent cash flow obviously got burned because overnight everybody's cash flow, or not everybody, but a large part of businesses' cash flow stopped. That was where we put subprime borrowers. People that had credit issues, they all went into this revenue lending, merchant cash advance, this money that was based on cash flow. Well, indefinitely, that's on pause right now until businesses get up and running and their revenues start becoming consistent again. So you really can't get a lot of financing based on cash flow right now. Now, you can get money based on collateral, 401ks, stocks, bonds, IRAs, equipment, inventory, account receivables, purchase orders, commercial vehicles, commercial real estate, and on and on. If you have an asset that's worth money, even equity in your primary home, you can use that as leverage to get money for your business. But what I find is less than 10% of people that we talk to have that collateral. So even though you can still get it and it's still as available as it was before the COVID-19, not a lot of people have assets, let's be honest. So that pushes it to the 3rd C, which is this one. This becomes the primary driver of money right now, of capital. And it's called the credit line hybrid. You get up to $150,000 in funding, 0% rates for up to 18 months. Some of these report to the business credit reporting agencies to these credit lines. You're getting able to take the cash out of these credit lines. No doc, you don't need bank statements, and you don't need tax returns. So why that's a big deal is because if your revenue declined, it's not going to matter. They don't care. They're not looking at your revenue with this program. They're only looking at credit. Now, the great news is you can use your own credit to qualify, 680 FICO score higher, or you can use that of a guarantor, a family member, a friend. So, for example, if you're going to go to dad, mom, brother, sister, potential investor to help you out of COVID-19, then you can use their credit to qualify, get up to 150,000 credit lines. A lot of the credit will report on the business credit reports. So you're building business credit. It's not adversely affecting their credit because the credit's reporting on your business credit reports. So you're building business credit. You're getting the capital you need using the credit of yourself or a guarantor. More than ever, this becomes really, 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 really important. Okay. The reason it becomes important is because, as I mentioned, cash flow, credit, collateral. Cash flow now, financing, really hard to get unless you have better credit, longer time in business, revenues haven't been adversely affected. Collateral, not easy to get financing, but a lot of people don't have it. Now credit is the driver. And this is even more important because you're not able to go out and successfully get credit cards on your own right now. It's just not happening. These funding sources are using their back channels to the underwriters to get things approved. Overwhelmingly, overnight, Chase, Bank of America, Wells Fargo started declining everybody's credit card applications. And these sources became very popular because they're able to go in and actually work with underwriters to manually get things approved, whereas people are still struggling to get credit cards approved by themselves. So if this is interesting, if you want to get up to $150,000 in credit line, give us a ring, 877-600-2487. We'll talk with you more about this. And the tried and true, right? Business credit. Business credit now becomes a primary driver of money to grow your business. Here's why. We have not seen any change with credit issued on the corporate credit side. No change. Lowe's, Amazon, Home Depot, Visa, MasterCard, they're still issuing corporate credit at the same level that they always were. And so even if you don't have cash flow that's consistent, even if you don't have good credit, even if you don't have collateral, never forget you can still build business credit. You can get vendor credit right away that you can ease cash flow. They'll give you terms instead of spending cash for stuff right now. They'll give you a month to 2 months to pay it back. Once you get that credit, use that credit and pay it back, you start to get Amazon, Home Depot, Lowe's, Sam's Club, Costco, Staples, Office Depot, Apple, Dell, HP. You start to get Walmart, Amazon. All that credit becomes available in about 60 days. So you can get $10,000, $20,000, $30,000 limits you can still use to fund your business, and that is still flowing freely, this kind of credit. Then you can get Visa card, MasterCard, auto financing. And this will help you qualify for other forms of financing as well. The approvals are fast, the limits are high, you don't need credit checks, you don't need collateral, you don't need to verify cash flow, you don't need to provide a personal guarantee. This is still one of the best ways to get money with the state of the business lending industry. So if we can help you with that, feel free to give us a call. We'll do a free assessment to see how fundable your business is. We'll do a free check with the reporting agencies to see if you're set up now. We'll help you get free credit reports with Dun & Bradstreet, Equifax, and Experian. And we'll do an assessment to see all the funding you can get with SBA, outside of SBA, all on that phone call at absolutely no cost. So if we can help you with this other kind of financing or give you any advice on the SBA PPP, then feel free to give us a ring on that as well, okay? And also never forget, when we help you get loans and credit lines, we never charge you any money. The lender will charge you points, rates, and fees, and we do a large volume and we get you discounts there. But if you're ever looking to get the most money for your business, we work with over 1,000 lending sources and every legitimate funding program, so we will be able to help get you an idea of all the money that you're able to get now. So again, in recap, a lot of things have changed here. The Treasury Department has new regulations, a lot of new requirements that we've talked about today. We're waiting for the House and Senate to sign off on another bill that will make it easier for us, because I'll be honest with you, the Treasury Department's new regulations are pretty harsh. They are harsh. They are not lenient. But what's coming through the House and Senate is much more lenient. So where we are right now, we really all need to push for this to go through the House and Senate, because that will give us leniency, whereas the Treasury Departments are pretty horrendous of what they're expecting, as we've talked about through today. So don't forget, if we can help you, feel free to give us a ring, 877-600-2487. This is what we do, is help business owners get capital. So if we can help you along the way, please let us know. Okay. And also don't forget, we go live. Today is my first day testing something new live. I'm using something called Restream, and when I close this down, I'm going to go see if it worked like it should. And if it did, we went live on YouTube. We went live on Periscope. I love you, Periscope. I miss you. I haven't seen you for years, but you got me started live streaming. I miss you. And then also we should be live on Facebook. And if this works as it should, it will give us the ability to put even more information to you on your channel of choice that teaches you all about how to get money for your business. We go live on Facebook and YouTube weekly. We go live on Periscope now weekly. We have daily tips on Twitter and Instagram, and our podcast has over 300,000 downloads. So it's very popular where you can listen on the go. And we have all kinds of industry experts that teach all kinds of cool things that help help you grow your business successfully. So thanks for tuning in. Don't forget, if we can help you along the way, give us a ring, 877-600-2487, 877-600-2487. And don't forget, you get that free consultation with us where we see how fundable your business is. We help make sure that you're set up with the reporting agencies. We get you free business credit reports with Dun & Bradstreet, Equifax, and Experian. And we tell you how fundable your business is, or I basically mean the kind of loans and credit lines you can qualify for now. All of that takes place on our call. So feel free to give us a call if we can help you get money for your business. Thanks everybody for tuning in.